Hey, thanks very much, and welcome back to the program. Third quarter begins right now with a 25-year-plus staple to our diet. He is Chuck Malamut, the official financial advisor to the Hurley in the Morning program. And for all of your financial planning needs, turn to Chuck Malamut, who is the managing director of the Malamut Group at Morgan Stanley's Northfield office. 609-383-2010 is the phone number. I use it often. You should do the same. The following program is presented by Chuck. I mentioned a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Having said that, Chuck Malamut, good morning.
Good morning, Harry.
How are you?
I'm doing just fine. How are you today?
I'm doing great. Doing very, very well. Let's get your opening comment. How are things going? Unless you're, I know you don't speak about any one stock, but unless you're, out there and feeling the Apple pain, Apple is experiencing something that is unprecedented in the entire history of the company.
For Tim Cook to be on a show at 6 p.m. on CNBC. I won't mention who the guest, who the host is, but everybody knows. I just find that rather intriguing in an effort to get the message out.
That things aren't as bad as they are?
Well, I mean, Apple has a lot of work to do. There's no doubt about it. I mean, they're obviously still very, very profitable. The question is, it's now being viewed as a value stock, not a growth stock, a phone company, not a tech company.
Wow.
Taking it out of the S&P or the Dow Jones, putting AT&T back in. So it's kind of reminds me of.
Have they lost their entire mojo?
No, I don't think so, Harry. I mean, I think that they will not disclose what's in the pipeline, and rightfully so.
Why should they have to?
They shouldn't. And I just find it interesting that a few people that I know are all having problems with the 6. With it blacking out and not coming back and not getting messages and phone calls. Now, I don't know if it's I just find it rather ironic, Harry, that, that I know of 3 people very, very close to me that are having problems with their phones. And I don't know, albeit it's only a very, very small percentage of the population out there, but if they're having problems or other people having problems as well. So, but you never know. I think that if you own the stock for a lifetime, it should work. But it's like anything else. Any of these companies are going to go through, 1, growing pains, and 2, consolidation, and 3, ultimately decision, moving forward. Do I want to own this, long term, or is it time to fish, cut bait and move on?
How much are they down?
It's over 25%. I heard a strategist or an analyst this morning actually has a $150 target on the stock. So
see, here's what I don't think is fair. You know my position. I mean, I don't hold the stock, so this is just a fondness for success. Like you, I'm a hard worker. I admire success. I admire hard work and innovation and such. If they're in between right now, releasing a new phone, whatever it will be, iPhone 7, whatever it will be. They have the 6, they have the 6 Plus, they rocked the sales, during that. So you're in between where, for example, once I have a phone, Chuck, I'm going to have that for probably 2 years. I have bought a new Apple phone roughly every 2 years for the entire existence of this company. I've been with them from the very first version with a little tiny screen, and every upgrade. Sometimes I didn't go to the S version. I would wait until the next upgrade. I didn't get the 5S. I went from the 5 to the 6, and I didn't get the 6 Plus. I struggled with the decision, but I decided it was too big for my pocket, and I'd rather have a mini iPad and have my regular iPhone, which was already bigger than the iPhone 5. So why do you get punished when you're in between a reasonable – to me, it's reasonable that you're not doing the iPhone 7 just yet, but it will come, and they're working on other things that they're not saying. I think they are priced beyond to perfection is what I'm saying.
No, Harry, it's you missed the number. bottom line, the revenues were not where they needed to be. They were down for the first time in 13 years. Actually, I was wrong in what I just told you. From top to bottom.
Could you say that again?
I was wrong. Harry, I admit when I'm wrong.
No, I'm just teasing.
Stock was actually down from its 52-week high about 44%.
Okay.
8 consecutive downward days. So now you're seeing a lot of the institutional money, a lot of the mutual funds, readjusting their portfolios, and that's putting obviously downward pressure on that particular position. But I'm not picking on Apple. I know that you're.
Well, I brought him up. You're not. I brought him up.
I know that you're a big fan, but this does happen with quality equities. I mean, they're sometimes going to trade.
But if they come out with the iPhone 7 within a year or so, would be my guess, and I don't know, but that's usually been their track record. And if there's something, about it that, like every other one, I need to have it. If it's improved, and if it's bigger, if it's better, and all these different things, they keep upgrading the camera. They keep upgrading. I'm big on the ability to record with my iPhone and do certain things. They keep, improving the certain, technological points of the phone. If they do something else, then they're going to crush it again. I think they're in between right now.
If they can get on track, then obviously this is a great time to make certain that if you don't own the position, that maybe you do acquire it. It probably should be a staple in most portfolios. But it's as I think we mentioned, have they lost their mojo?
But then remember, for example, and again, we're doing what we never do. We're talking about individual companies, but we're having a broader conversation and just using them as examples is the way I would like to intellectually, honestly point it out. Facebook, which was having a very significant monetization sort of problem because the philosophy of Zuckerberg, he loved the concept of Facebook, but he really didn't like monetization. Well, look what they did. Now, Chuck, they crushed their number.
They did, Harry, and I think if you look at
Zuckerberg made $4 billion in one day.
I think if you look at technology, the sector, and kind of you put all these companies in that sector, and year to date technology is the worst performer in the S&P 500. It's down almost 3%. Last week, that was down about tech was down about 3.6. So you went from positive to negative in a relatively short period of time, and so this is Harry, again, a true testament in making certain that you obviously are diversified, not just owning one particular company and one particular sector within the S&P 500 or the other indices that are out there. I mean, there's a lot of some really good things going on, within the marketplace. So you have to kind of, put Apple aside for a second and say, okay, what else is out there and happening where an investor can in fact make money?
Chuck, there's an announcement that I've made at the beginning of every hour, and I've made it several times each hour this morning. We probably made it 10 or 15 times since we signed on this morning for the first time. I've known about this for quite a while, and it's actually been on air for several weeks. We just haven't publicized, but we are proud and pleased to announce major breaking news. We are now WPG Talk Radio 1450, now on 104.1 FM.
I did hear that this morning.
Try it out when you go back out to your car, Chuck. Put it on. You're going to hear it sounds, stereo is different than mono.
But I do like you in the HD, Harry. You sound a lot crisper.
I appreciate that.
A lot younger.
Appreciate that. Yeah. Thank you. Thank you for all these compliments. For an old guy, I sound younger. 104.9 FM HD2 is what Chuck is speaking about. But on your regular FM radio, 104.1. We are now WPG Talk Radio 1450 now on 104.1. In the very near future, you're just going to hear us say, WPG Talk Radio 104.1 FM. We will still be on 1450. We want you to know that. There are some people that love the AM band that don't leave the AM band. You can listen there. But we just want to let you know that if you're driving around or you want to make the switch to 104.1 and check it out, it's real time. There's no, it's the same program, and you'll just hear it a little bit differently. I enjoy the processing and the way that it sounds. So again, 104.1 FM. Thank you to our president, Michael Rubel, our program director, Chris Coleman, our chief engineer, Tom McNally, and everyone at Town Square Media for the investment in this wonderful station that we call home for so many decades. Chuck, before we have about 3 minutes or so before the first break, I jumped in real quick and you allowed me to do that. And when you get a second, give us your market update.
Harry, I'm very well. Let me shift gears here for a second. I'm looking to the 9:05 hour when the mayor of Atlantic City comes on air and discusses, I'm guessing, the reason that they in fact made the bond payment.
By the way, I want to thank the mayor for making me look good yesterday when I forecasted to the entire Delaware Valley on PHL 17 that bond payment would be made, because after I signed off, I had two different media people call me hoping for me to be wrong because they were looking to skewer me. Who told you? I said, well, first of all, I don't have to tell you who told me. I'm going to be proven right, and you should report that. You have to wait till 11, but you listen to me, so you now know it now. If you know anything about my track record, we pitch, nearly perfect games on these kinds of things. I stopped short of saying learn and confirm, but I did say that I am forecasting that the $1.8 billion bond payment would be made, because unless, Chuck, you didn't have the money, and let's have you as a finance expert speak about this. Unless you didn't have the money, for example, you're Puerto Rico, and you don't have $370 million to make a debt payment, well, guess what? You can't make it, and you default. We have not had a New Jersey City default since the Great Depression, and I was utterly confident when I made my projection that bond payment would be made. I said it like it was breaking news because I knew that bond payment would be made. The only reason it wouldn't be made is if literally the city didn't have $1.8 million to cover the check.
Yeah, I'm miffed, Harry, why some of the council members were not in favor of making this payment, because if you did not make the payment, I guess it's very I want to say maybe you're a little short-sighted and trying to keep the money in the bank so it's there for the next payments, which I guess maybe are payrolls or whatever it may be. But the bottom line with the credit rating where it is today, the fact of the matter is that money, if available, is very, very hard to come by. So Atlantic City was forced, to make this payment. The bondholders, in good faith, lent the money to the municipality, and the municipality's obligation, or Atlantic City's obligation, is to pay interest on a timely basis. And and if not, you're in violation of multiple, covenants within the
By the way,
prospectus.
There's even a 1947 law that makes it like a fourth-degree crime to not make a required payment. And I'm not going to get crazy and suggest that anybody would be criminally liable, but literally by law, I could even cite the statute because I looked it up. It is against the law to not make a payment. And I want to point out, we did cover this yesterday at length. We're going to cover it with Mayor Guardian. These were two bonds from year 2012. And some of them had interest payments that were due. So you would be, I know people are saying, well, I don't care about these people getting interest payments. Well, they made an investment. They're supposed to get paid. And in some cases, when a city is, Atlantic City right now with a CAA 3 negative outlook by Moody's Investor Services, you can't even borrow at this point. So paying the debt, Governor Christie, I think, is right. My detractors who say that I'm wrong when I say this, and we'll see what you say as a finance expert, this would affect the state's credit rating. It would affect other municipalities. And it would be, well, like I said, the news about Atlantic City making the payment has been a whisper. Had they not made the payment, it would have roared internationally.
It would have been. Harry, as tough as it is for Atlantic City right now, that could in fact have been the crushing blow. Where, if you're considering coming to Atlantic City for a convention, maybe 5-7 years out, for instance, 3 years out, I think if you were that planner, you would probably be looking at other venues, because you're saying, how am I going to commit my group to this city when,
Yeah.
in fact, we don't know the state of the city.
And, Chuck, that's reasonable, and it's well said, and that's why I keep giving in my column and here on air big, big kudos to Jim Wood, the equivalent of your Visitors and Convention Bureau. They call it Meet AC, and their sales culture and their incredible service staff that does such a great job in booking business now and into the future, because they're setting records. That's to their credit, Chuck, because they have to have a very challenging conversation.
Oh, I'm sure it's obviously the number one item that they talk about, and we and Harry, I don't want to sound like a broken record because we have chatted about it, and off air, on the air, but the politics of this has to end. And it has to end soon because.
Did you hear me read Bob McDevitt's letter?
I did.
He'll be here tomorrow at 7.
The last half of the letter.
His letter is excellent.
And what I heard, Bob, was absolutely right. And the fact is that we can't continue on a day in and day out basis, operating this, because Harry, becomes very exhausting. Now I can't imagine working there. You think about one. Am I gainfully employed, and two, am I going to get paid?
And that's stressful. These employees, okay, we'll wait a month. Instead of getting paid in 2 weeks, we'll wait a month. We can still pay our mortgage. Now what? Now there's a $7 million payroll payment that's due in a couple of days. 21 minutes past the hour. Chuck Malamut continues. We'll be back in just a moment. If all goes well, I think they've been so polite to tell me she is still keeping the appointment. It would be really quite a shocker. I'm expecting Andrea Tantaros in the final 10 minutes of this hour, and then Mayor Don Guardian, and a lot to catch up on with the mayor, including everything that went behind yesterday's decision to make the $1.8 million bond payment, which I knew. I made my forecast because I knew that he would do it, that he could size up the importance of making that payment for local reasons, but also, being responsible to the entire state. I'm not surprised, and I confidently was able to project that. 24 minutes past the hour with Chuck Malamut. It's early in the morning. Chuck, let me ask you a question, because you are so uniquely suited in terms of skill sets. And, we're brothers, but I don't just say nice things, just because of that. You had a very successful career as a senior hotel executive, the senior hotel executive at the different properties that you were at. And an incredible 30-plus year career as a financial executive. What would you do if a $7 million payroll payment was due and you didn't have $7 million? Because I'm asking Mayor Guardian that question in 30 minutes. What do you do?
I guess after you're done crying and pick yourself off of the floor. Because
when they did the thing where instead of paying you every 2 weeks, we're going to pay at the end of the month, and then they're hoping for May tax receipts and things to come in, but the mayor admitted this is not a solution, and that it has a limited window shelf life of like June or something. Well, it's May 3rd, so if you don't have the money, then I just believe. Then they take whatever deal the state offers, probably. What do you do?
Harry, I kind of view it as a wounded soldier. And, you got to, you're barely your own life support at best. And I'm thinking that the city is now forced to do what the state's going to tell them to do.
So they're pouring whiskey on the rusty knife that's going to cut that limb off, and then they're going to put a tourniquet on. I mean, you're in triage with a butcher or something. I mean, these stakes are incredible.
No, I understand where the mayor's coming from, certainly, Harry. But the problem is that you've been in a stalemate for an extended period of time, and you have to break that.
Yeah, but here's the thing, though. In fairness to the mayor and the governor and the Senate president, I mean, until the Assembly Speaker gets on board with something, if you don't have legislation, then you do not have a resolution.
You go nowhere. So let's so 9:05. You're going to get a few more answers, I'm hoping. Why don't we shift gears here for a second, because we're
running out of time.
We're going to run out of time. If you look at the equity markets, Harry, last week they were down about a little bit over 2% or 1.2%. There was a lot of focus on monetary policy. The most recent meeting that the Fed had created a fair amount of debate about rate hikes, and we talked about it and when they're going to happen and to what magnitude. I think what also would hurt the market was the fact that the Bank of Japan failed to move rates further in the negative territory. Generally speaking, earnings were, I guess, weak at best. And, another decline in the value of our dollar led a rally in commodity prices, Harry, which is actually a good thing. So
we have a decline of the dollar, but we still have a strong dollar.
Comparatively, long term, yes. But now, so your number one topic is the economy. Every time I look, I'm just waiting at you. I'm just waiting for those words.
Because it's everything. It's whether you're going to have a job. It's whether you're going to get an increase. It's whether you have a happy, attitude in your work. I mean, the economy, whether you spend discretionary spending at restaurants in the community. I mean, so it's everything.
So if you look at first quarter, Harry, it looks as if the economic growth, I guess the best word to describe it is sluggish. We're the opinion that as we get through the remainder of this year, the economy is going to, pick up some steam, so to speak. Real GDP, advanced by 0.5% last quarter. The consumer that we always talked about, that three-legged stool, the consumer remained fairly steady. Housing activity did improve somewhat, but capital expenditures were weak. And, they were weak because, when you live through January and February, a lot of companies, whatever their potential expenditures are going to be, they're going to put a lot of that spending on hold.
They pulled back, yeah.
So, we expect as we get through the end of the year that the consumer spending will in fact improve. Capital expenditures will improve. And both of those items should help the economy advance at what I'll describe as a moderate pace.
Is there any estimate from your experts at Morgan Stanley insofar as, obviously we had fractional growth in the GDP for the first quarter, revised downward to 0.5. Is there any feel for by the end of the year where we'll be? We certainly are not going to be 3 or above. But is there any
expectations probably around 1.5 to 2?
Terrible.
In all likelihood. And hopefully as we get through November, we can focus on really what's important to make, to have this economy grow. I remember last week we had a very lengthy discussion about the Fed and are they going to make a move with rates, and when are they going to make a move with rates? So expectations anywhere from 1 to 2 hikes this year. Interesting about what the Fed did in their most recent statement, they left out the fact that they're less concerned about what is happening globally speaking, that the financial risks that were out there seem to have, abated somewhat, Harry. So we think that the central bank right now is looking at ongoing improvements in the labor market and getting investors ready for a probable rate hike in the upcoming months, provided that the economic data that we just sort of chatted about does in fact improve.
Yeah, we have to go to break, Chuck. We're going to come right back. One more power segment with Chuck. Andrea Tantero scheduled to be on deck. Normally I would know that it's just absolutely beyond question, but just because there is some uncertainty what's going on, I'm leaving open the possibility that interview may or may not take place. And when we come back, more with Chuck Malamut, our official financial advisor, in our 26th year together here on the program. And Chuck has more years in his field than that because we started 5 or so years, 6 maybe more years after Chuck began his financial services career. From Morgan Stanley, the managing director of his group, the Malamut Group, at the Northfield office, 609-383-2010 for all of your financial planning needs. We'll be back with Chuck Malamut. We're back 34 minutes past the hour. Chuck Malamut is here, our official financial advisor to the Hurley in the Morning program. Chuck, time is yours.
Harry, let's go back for a second about GDP.
Yeah.
So if you look at the first quarter, it looks as if the 0.5, which is going to be the print, slowest gain in 2 years. The economy expanded, again, at that annual rate of less than 1%. And, I'm going to throw the word out there that you absolutely despise, beginning with an R.
Do it.
So the weakness has raised some concerns about a recession.
Yeah.
A lot of investors are looking to see.
Would that qualify as a double dip, or we actually came out?
No,
right?
we came out. So it would. So if in fact
feels double dip.
Investors are asking and concerned, obviously, about growth, and if you look at the first quarter, Harry, GDP was weak due to the drags from trade and investment. Two components that have fallen largely because of what happened with at that point in time a very, very high dollar and low commodity prices. Now, so this has in fact reversed itself, and a lot of the energy investments that were being done through the fourth quarter of 2014 have since been put on hold. I'm not throwing it out there to scare your listeners and those that invest, but the fact of the matter is it's something that we need to think about as we get in through to the latter part of this year. Earnings for the most part in the first quarter, 60% of the S&P companies have reported to date. Earnings are slightly ahead of what I'll call tampered down expectations. Revenues, and we talked about this before, they're flat versus the forecast. So earnings growth is set to decline by about 4% year over year, but it would actually be up by about 1% if we kind of took out the energy. The energy sector of the S&P 500.
But you can't do that.
Well, yeah, but
you separate it because it's one.
It obviously
area.
had a major impact with respect to the economy. We talked about the dollar. The dollar should strengthen, we believe, sometime later this year. Investors still appear rather bullish on the U.S. dollar. If we do, in fact, get the economic growth does, in fact, improve, the likelihood of higher interest rates that we've kind of just chatted about a little bit before should actually apply upward pressure on the dollar as well. So, if you take a look, Harry, what we've accomplished in the last several months is nothing short of remarkable. The S&P has risen close to 15% over the past couple of months and is now only a few percentage points away from its all-time high. And, as a result of that, valuations have expanded. And that, Harry, does not typically occur when commodity prices rise. So we're somewhat of an aberration here. We think that investors believe that these rising oil prices are removing some risks in the global financial system. As a result of that, they're willing to accept higher energy costs for U.S. consumer if it means countries such as China, such as Russia, face less economic pressures getting into the next couple of quarters.
Over the past several years, in particular this presidency, I have often commented to you, do you think the world could ever gang up on us effectively? China, Russia, other actors. You've always beat that down and said they really can't. I really think that a lot of that is going on right now.
If look, you asked me the question 8 years ago, I would tell you absolutely not.
I would too.
If you asked me,
I wouldn't have asked you the question 8 years ago.
If you asked me 4 years ago, I would say improbable that it happens. If you're asking me now, I'm saying, Harry, anything could happen, if that makes any sense at all. And we are unfortunately very, very weak, and hopefully, there will be some changes to that as we get through the fall into the early winter, because we cannot continue to operate the way we've operated over the last 8 years. It's just economically, it's not feasible. You think about, and I'll kind of bring it back home because we're kind of running out of time here. Now,
we have 5 minutes.
A lot of things did happen, to Atlantic City. Would Atlantic City look differently if the economy was different? if the economy was substantially better.
Absolutely.
So, what happened
Contraction wouldn't have hurt as much. We probably wouldn't have closed 4 casinos. Oh my gosh! If the economy had been different, it all would be different. The only reason, remember when we were recession proof, when it was
yes.
us, and Vegas, and that was it. And every recession, even deep recessions, we never felt we were so spoiled. But of course, that's totally different now.
Yeah, that is obviously has changed. So, I guess the question at hand is, Harry, is investors are always looking, for reasons to, should I buy equity? Should I be selling my equity? Should I be in fixed income? Should I be selling my fixed income? At this point in time, economic growth is not sufficient to get investors enticed to move out of the safe haven assets, the fixed income, the treasuries, and take on more risk. And many investors are very, very concerned about the rally that has taken place over the past couple months. It seems.
Why are they concerned?
Well, they're concerned because markets go either direction. You can be oversold.
Yeah.
You can be overbought. So the consensus out there is that what has worked of late, high yield bonds, commodities, equities, may be overbought somewhat. And I don't be at all surprised, Harry, if we end up with some kind of consolidation. Consolidation is good. You need to have this happen. But over time, we do expect some improvement in the global economy. We do expect some growth.
How come markets don't process good consolidation until well after the fact? Shouldn't they respect the fact that this is a good consolidation, but they seem to punish, then ultimately after the fact recognize, but it was a good consolidation? Am I right in that? Or no?
Harry, remember the equity markets as a leading indicator. So, and it looks 6 months out. So what it is saying is, when we – and you have that, and you have the fact that you have all the geopolitical risks at hand. So if you kind of take what happened in the beginning of the year, the market was very concerned about the geopolitical risks, what was happening in more overseas and how it was impacting here back in the U.S. We kind of worked our way through it. And now, as we get through this first quarter, all the analysts are saying that we may hit the trough, so to speak, with respect to earnings. So, if that is in fact the case, having a rally, that we had coming off of those February 11th lows, makes a lot of sense. So, we do expect, as I mentioned to you, some solid growth gradually, globally speaking, and a rebound in corporate earnings. So if those developments do in fact happen, Harry, it should be enough for investors to sort of say, okay, I'm good with equities, moving forward. So we do expect that equities will outperform fixed income and cash over the next 6 to 12 months. But obviously there's a lot of headwinds out there. And there's a lot of news that we have to digest.
Very talented tax preparation guru wrote in, they wished all their clients listened to you and followed you. Chuck, thank you. Thanks for a great visit. Until we meet again 1 week from today.
Harry, we'll talk with you soon. Thanks a lot.
Good to be with you.
Take care.
I will be on very short sleep the next time we meet. I will be up for a day straight by the time I see you.
But, Harry, you are a true professional.
We're going to do it.
And I am convinced you're going to be A-OK.
We're going to do it, buddy. We're going to do it. Chuck Malamut, for all of your financial planning needs. He is the managing director of the Malamut Group at the Northfield office of Morgan Stanley. 609-383-2010. The following program you've listened to, presented by Chuck, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck Malamut, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. All right, if all goes well, Andrea Tanteros, when we come back in a few minutes, and then following that interview, and if it doesn't happen, we'll do some open forum. Following this, segment until the top of the hour. Right after the news break, we will have a visit with Atlantic City Mayor Don Guardian. Very important visit because we'll get some perspective on, I know why, because I was a financial guy. I know why this bond payment was made, and I know why this bond payment had to be made. But there are people who disagree, not me, that disagree that it was made at all. And we're going to have a really important conversation with Mayor Guardian coming up in 10 minutes. Actually, more like 15.